We're going to do a brief video on gold price prediction, and we're looking at a daily chart for gold futures on the COMEX exchange. The ticker's GC, and we've got three moving averages on here. We've got a green 5-day, we've got a red 20-day, and a blue 200-day. And we're going to scoot back here a little bit to looks like August of 2020, where we put in a top for gold around the 260 level, 280 level, roughly right around in there. And then you can see we came down and challenged the 200-day moving average. Now at this point, the 200-day moving average was still in an uptrend. We had a slight little break and then rallied up, but failed to put in a new high at this point right here in January of 2021. We broke down and officially entered a bear market here right around February of 2021 for gold. Went down, made a low at about 1675 roughly, rallied back up to the 200 and got resistance, and you can see we oscillated back and forth. Now notice at this point, starting at around March, the 200-day went flat and then started to decline. So people had no idea, the traders and investors had no idea what was going on here, because you were getting oscillation around a declining 200-day moving average, which is never a good sign. That basically kind of ended when it flattened out here right in about November of 21, and the price took off, confirmed, and went parabolic right around starting right around January of 2022. That parabolic move went all the way up, but I do not think, let's check it, I don't think it made a new high. Our high here was 2089, and our high here was 2078. So it made this parabolic move here in March of 2022, but it didn't make a new high, and that was your first signal that we were going to break down. The second signal, the first signal was this parabolic move. You can see what goes up must come down. This is just too fast, too sharp of a rise. It did respect the 20-day moving average, but when you have this kind of distance from the 20-day to price, that's not sustainable. So you can see it broke down. We got a rally at approximately the 50% level retracement, and then it crashed down into the bear market. So from this point here, April of 22, all the way down here to this low in July, looks like about $1,690. That's basically, the bear market officially started here in June, but we were collapsing well before that, even from April, as you can see with hindsight. But with this firm collapse and respect of the 20-day moving average below the 200-day moving average, we're in a bear market in gold, and have been since the third week or so in June. And what we're getting today is a sell-off in a bear market. So you can see prices below the 200, below the 20, and below the 5-day moving average, and is making lows for this current 2.5 week cycle. We're right this moment, I'm not really sure if this is just some delayed pricing, but right this moment is saying about $1,720. And what I see for gold right this second is gold's probably going to put in a short-term bottom right here at around the 1700 level, maybe 1705, somewhere around in there, and it's going to do that very shortly, maybe in a couple days. And again, this is all my opinion, all for entertainment purposes only, but it looks like it's going to put in a short-term bottom. There's a chance it may test this low that was established back here in June 21st of 1678. There's a chance that it might do that, but if it does not break that July 21st low, we're probably going to put in a bottom around 1705-ish, something like that, and then rally back up to about the 1800 level. That's, looking at this chart right now, that's my best guess. So assuming we get support for this current decline, we should put in a bottom at the low 1700, 1705 or so, and rally up $100, close to 1800. Again, all my opinion, just a guess, and for entertainment purposes only. I don't see it challenging the 200-day moving average just yet. It may do that if we get a really strong rally and some backing and filling. It may do that at the end of September, but right now I'm looking for a little bit of a decline and probably a short-term bounce of a significant amount of money, probably up to $1,800. Again, it's a trader's market. I'm not recommending you do anything with this market in terms of buying, selling. You got to do that yourself, but that's what I see right now. Let's take a look and see what RBAM Research says about it. RBAM Research puts out algorithmically generated prices every day, Monday through Friday. This is for today, the 1st, and it's recommending, there you go, the gold price, coincidentally, what I just talked about, 1705. For one-day hold, it's 2, 5, 10, and 20-day holds are available. These are all for entertainment purposes only. You have to use your own analysis. This second row is for a higher probability of a profit, and the difference is mainly you get less trades. This is not always populated down here. This one, the buy or the short, will usually be populated every day. You'll get a buy or a short. And same thing for the short sheet. Sometimes you get some higher probability win trades down there. But so for a one-day trade, basically what this says is if it hits 1705 and your own analysis says it's a good idea, you could consider entering the market holding for one trading day, which means buy today, close out worst case end of trading tomorrow before the market closes, and take your profit as soon as you get it today, whenever you get it. If you do, worst case, close out at a loss before the market closes tomorrow. So these are trading days, 1 through 20 trading days, and that's how this works. You pick your price out of a column and go from there. Again, entertainment only. You have to do your own research, and these are just for entertainment purposes only. These come out by 7 a.m. Monday through Friday at rbamresearch.com. You can get them all for free, and no credit card required. We cover 190 stocks, the major forex pairs, BTC for crypto, and again, as I just showed you, gold futures, S&P, crude oil, and T-bond futures. Again, 7 a.m. Monday through Friday. They're all available at rbamresearch.com. There's a link in the description below. And if you like this video, please click the like button. If you want to see more, please subscribe. If you have a great comment to leave us on how to make these videos better, please leave that in the comments section below. We'd love to hear from you. And these videos are for entertainment purposes only. Everything you hear or see, including the entry prices, is our opinion and for entertainment purposes only. And you definitely trade at your own risk.